When people think of banks, they often think about checking accounts, depositing money, and loans. However, the top banks in the world also have trading desks. Take Bank of America, for example. In Q3 2022, its trading desk never had a single day of losses. Moreover, on 94% of the trading days, they made over $25 million in revenue. That's probably why it's the third most searched banking stock amongst financial pros over the last month on Trackstar. But are its massive trading profits enough to make it a solid investment for you? Now, Bank of America is the second largest publicly traded bank in the States. It has $1.4 trillion in consumer deposits and 67 million consumer and small business clients. And Bank of America has experienced a slowdown in revenue growth over the last 4 years. In 2018, it did $91 billion in revenues, which slipped to $89 billion in 2021. But over the last 12 months, its revenues stood at $91.5 billion, a sign that the company is getting back on track. Additionally, it pays shareholders an annual dividend of 88 cents per share. Bank of America trades at a PE gap ratio of 10.7x, which is slightly higher than most of its competitors. Its price to sales ratio of 3x is also higher than its competition. JP Morgan sits at 2.8x, Wells Fargo at 2.2x, Citigroup at 1.1x, and HSBC at 2.2x. Price to book is also an important measure for banks. It compares the company's share price to book value of its loans and deposits. Bank of America's price to book ratio is cheap at 1.13x. However, except for JP Morgan, all the other competitors listed are cheaper. Bank of America has a net income margin of 29.9%, which is better than Wells Fargo and Citigroup. Only JP Morgan at 30.7% and HSBC at 30.8% come out higher. Yet they're all in the same ballpark. However, Bank of America lags in its cash from operations, which stands at $3.9 billion. Bank of America is growing in all areas of its business. For example, in Q3, it added 418,000 new checking accounts. It grew its average loans and leases by 18% and sales and trading revenue by 13%. Moreover, the firm has experienced year-over-year revenue growth, something its peers can't say. In our opinion, this is a 6 out of 10 ranking stock. In general, bank stocks tend to underperform during periods of high inflation. However, if inflation is mild, Bank of America could do very well. The company is back to its peak revenues and has several areas of its business growing. But if we were to buy a bank stock, it wouldn't be Bank of America. From a valuation perspective, Citigroup and HSBC offer better bargains.